ask your question to John. John is a very good friend of mine, very trustworthy. He's done these talks for me over the years at various senior centers. He's not an official, because there's a whole troop of IRS retirees that do this. They volunteer. John does it for me as a favor and as a friend, and he does my taxes. So any tax question, if he doesn't know the answer, he can help you find the answer. There also, if anybody out there needs tax help, while the United Way is still doing their tax prep, they're doing it in a very different way this year. It's a little complicated. It's like a drop off and then a pickup. So you have to connect with your volunteer tax preparer. And because it's confidential information, normally you'd go to the United Way, you'd sit in a room with them and they would help you and do your taxes. You pick them, however that worked in the past. Now they can't meet with you in person. So it has to be done in a COVID friendly system. But if anybody wants information, please shoot me an email. And what I might even do is put that information. I think I have a flyer on that. I'll just attach that as well to the email that I send out when the program's over with the official PDF file for the changes. So let me pull this up. I had it and now it's not here. Where did I put it? So welcome, John. Good morning.
Good morning.
And I'm sure a lot of people, I'm going to actually take myself off of this, remove spotlight. And if questions, if you don't understand something and you must interrupt, if you could chat me, like if there's something you really don't understand to understand what John's talking about, just chat me and I'll interrupt John and say, could you clarify that?
Yeah, definitely. Yeah, I'd rather do that than wait to the end. Then you lose the train of thought and the question wouldn't, be as relevant.
So yeah, start talking.
Okay. All right. So we're going to go over the tax changes for 2020, and then, I'll cover some other areas. I'll give you some tips or some, recommendations that I give out to my clients, and hopefully they help. And then, like Michelle said, if you don't understand something, let's stop and discuss it. I think that's a better way to do it than wait till the end. So the first thing I want to cover is the stimulus checks. If you have not received both of the stimulus checks that you were entitled to, it was $1,200 back in like March or April last year, and then another $600 was around, I think, November, December, also the end of 2020. You can claim it on your tax return. It's line 30. And you can put down, if you didn't get the 12, you didn't get the 6, or the whole amount. So, make sure you do that. This way, you'll get that money when you get if you get a tax refund, or they will add it in and you would get that money back. And I just want to warn you, the IRS is still very much behind on processing tax returns because of the shutdown from last year. And they've done 2 stimulus checks. And now the bill was just signed, or the bill's going to be signed by President Biden on Friday. So the additional $1,400 is going to probably go out in the next week or so. So that's going to slow them down again. And for what I understand, there are over 6 million tax returns still that haven't been processed from last year. And they've also had a record number of returns filed this year. So there is already requests from Congress and the CPA Society to extend the filing deadline again, but that hasn't been decided yet. But just so you know, it's going to take a while for you to get your refunds and your money. And I also very strongly recommend you use direct deposit for your refund, because that does speed it up a lot. Okay? All right, now the biggest change that is going to affect a lot of us is the required minimum distributions, RMDs, on your 401ks, your IRAs, and if you have any annuities. Starting with 2019, if you were not 70 and a half by the end of 2019, you are not required to take your RMD beginning in 2020 until age 72. So if you were 7.5 prior to 2019, you already would have been taking it. If you were not that age in 2020, you can start at 72. So that gives you like another 2.5 years. And also for 2020, if you were taking out your RMD, you were allowed to skip it only for that 1 year. All right. If you are still working past the age of 70.5, they now changed the law and you will be able to continue to contribute to an IRA. Prior to that, you were not allowed that. So that's another little benefit they're going to give people to allow them to save more money. Now, on the negative end, they did change the law. Prior to 2020, if you left your 401k or IRA to your non-spouse, they were allowed to take the money out over their lifetime. That has now changed. Anyone other than your spouse, the beneficiary must take the money out over a 10-year period. So if you leave it to a child or a grandchild or whatever, niece or nephew, they must take the money out over a 10-year period. So that's a big difference in the tax law, because obviously they're not going to be able to take that money and save it for themselves until they're in their 70s. Now, also for 2020, normally if you take your money out before you're 59.5, there is a 10% penalty on the amount you took out, plus you would have to pay the tax. During 2020, the penalty is waived for anyone under 59.5, and any withdrawals that you took out, the tax on that can be spread out over a 3-year period. So that gives you a break on not getting a big tax bill in that 1 year if you needed the money for an emergency or just whatever reason you need it for. You don't have to give them a reason, but you do get that extra time. As far as the contribution limits for 401k, it's a $19,000, $500. And if you're 50 or over, it's $6,500 additional. 50 or over, you don't have to wait. If your birthday's in August, you don't have to wait until August. As long as you turn 50 during the year, you can begin to put in the additional $6,500. For an IRA, it's $6,000. If you're 50 or over, you're allowed an additional $1,000.
John?
Yes, does anyone, I was just to say, I'll take a break. Does anyone have any questions?
Question right from the get-go about, and I just lost the question because I lost it. But the question, sorry, here it is. The question is, the second stimulus check of $600 came to me, but not my husband. He didn't receive his. Why? Since it's based on the same income tax, we can claim only the $600. And what is the IRA contribution limit for 2021?
Well, all right, hold on. First of all,
second stimulus check only.
Yeah, second stimulus check. If you were supposed to get 6 and 6, that would be 12. On the tax return, you would put down. I only received 600, and you would be able to claim the other 600. Why it didn't happen, I don't know. I've heard a lot of questions from people about they got their first check and they didn't get their second check, and it was direct deposited. I don't know why that happened, but you can claim that. If you're entitled to 6 and 6 and you only got 6, you can claim the additional 6 for the spouse on that tax return on the line 30. And when you do your tax return, there's a schedule that you have to fill out, and it'll explain how you put the numbers down.
So you would claim that you didn't get it.
Yeah, right. Yeah, on line 30 says, did you get your? Hold on, let me get a tax return.
Yeah, it's just mysterious to me because
the
$600 was based on your 2019 income tax. So
yes, because you haven't filed your 20 yet.
Right. And so it was like, well, my husband is the main person who got the income. So it's like, why wasn't he given it?
Like I said, I've heard
really
many
weird.
people question. Yeah, I've read articles. All right, so line 30 says recovery rebate credit, see instructions. So there'll be instructions, and they'll probably have a little worksheet in the instructions, and it'll tell you how to figure out what you should have gotten what you did get, all right? As far as the contribution limits for 21, as far as I know, they haven't changed.
Okay.
So this will be the amount that I'm showing on that form.
Uh,
Don't forget, you have until April of next year to put in those amounts. So if it does change, if they announce a change, you could always add it in. You have plenty of time to do it.
Okay, thanks.
All right.
Did somebody else have a question about anything we've covered so far?
I'm not sure. Are we talking about 2020 or 2021?
These are the tax laws. These are the changes that were made in 2020, but we have, well, 2021, we haven't filed our tax returns yet. So these are for 2020.
Okay.
Right? Because we're doing our, even though it's 21, we're doing our 2020 returns. Okay. Now, like I said, with the IRA contribution, normally they may not announce that until later in the year. And like I said, you have until April 15th of the following year to contribute to your IRA for 2021. So you would have plenty of time. If they only may raise it $500. They don't make a big raise. It's very, I think it used to be 6 and 19. So it's not a lot of money, but you can add it in. You have like 12 plus 15 months. All right. And before I go on, I just want to go over now, once you start taking out your RMDs, I recommend, or I've told people, and it makes sense, if you think about it, it makes sense. If you have several accounts, you might have a couple of 401ks, you might have several IRAs, because over the years, you might have changed jobs or you open up different accounts. I would highly recommend that you consolidate all your accounts into one, because then when you have to start taking the money out, it'll be a lot easier to manage. You don't have to be dealing with one broker firm or whoever you have your money at, rather than have to worry about, because each account is going to have their own RMD, because it's based on the balance in your account. So one account may have more money than less, and each RMD is going to be different. So rather than have to deal with numerous accounts, if you combine it all into one, when it comes time to take the money out, it'll be a lot easier. You deal with one company and that'll be it. And also, if you have all the money in one account, you'll have a better idea of what you have. If you want to allocate your accounts over different classes of assets, stock, bonds, mutual funds, you want to, whatever you decide, but you have a better picture of what you have because it's right in front of you. And also, mostly in an IRA, you have more choices. Most 401ks give you one brokerage firm stock accounts, or they have mutual funds, where if you put your money in IRA, you could buy mutual funds, you could buy separate stocks, you want to buy gold, you want to buy, you have a lot of choices. So it gives you more control over your money. And the third point is how you withdraw the money. Your RMD is based on, if you were starting to take your money out in 2021, you were turning 72, they take your account balance at the end of 2020. So say you have $500,000 in your account. At age 72, the percentage is 3.6%. So that means you would have to take $18,000 out of your account in 2021 to meet your RMD. Now you can take it out, if you want to take it out monthly, that's fine. You want to take it out quarterly, you want to take it out all in one lump sum, that's your choice. And I do say, if you are going to take it out in a lump sum, make sure you do it no later than November 1st. Because this way, in case there's a problem or whatever, you have a couple of months to fix it. Because you don't want to go past December 31st, because you're going to pay a big penalty for that. But with the IRA, most IRAs, say you decide, I want to take it out monthly. So that's $1,500 a month. Then in June, halfway through the year, you say, you know what? I want the rest of the money. I want to go on a trip over the summer, or I want to do something. You can call them up and say, you know what? Give me the remaining $9,000 in June. You've met your RMD and you're able to change your thing. The next year you say, you know what? I don't want monthly payments. I just want to get it all at once. So you can call them up and say, just give me the whole amount at once. So I think that's the better way to do it. It makes your life simpler, and it gives you more control over your investments. and it gives you more control over your withdrawals. All right, so I just wanted to cover that. All right, so you can go down, scroll down, Michelle, to the next page. All right, so the standard deduction, as you know, there's no more standard deduction and personal exemption. They've been combined. So the standard deduction for 2020 is for married filing joint is $24,800, and then $1,300 for each person 65 or over. So it will be for a married couple over 65, there will be an additional $2,600. For a single, it's $12,400. If you're 65 or older, it would be $14,050. All right, a new thing for the 2020 return is you're allowed to take a $300 contribution deduction in addition to the standard deduction. That's on line 10B on the front of the tax return. And it's only $300. Even for a married couple, you're only allowed $300. All right, the gift tax exclusion remains at $15,000 per person per year. So a married couple can give away $30,000 to your children, your grandchildren, your niece, your nephew, whoever you want, a stranger on the street. And you're allowed a $15,000 exemption from gift tax per person. If you're thinking about getting solar energy panels, a lot of people are getting them. The credit is down to 26% for 2020, and in 21 it will decrease down to 22%. And a credit is a direct reduction of your tax. It's not a deduction, so it really gives you a big impact on your tax situation. All right, so that's basically all the new items I have for the federal tax return. Anyone have any questions on what I covered or anything else as far as federal before I jump out to New Jersey?
If you want to unmute yourself and just ask the question, if it's easier.
Yeah.
Covered. Go ahead.
Hi. Yes. Is there energy credit if you've replaced your hot water heater?
No, that one. I think the federal one is expired, but I think New Jersey still has one. The one I'm talking about is only for solar panels,
Right.
The ones that you put on your roof. But I haven't looked. I could look it up for you, but I'm pretty sure I think New Jersey still has a credit for that.
Okay, but federal is no longer.
I'm pretty sure federal. Yeah, the federal is gone.
Okay, thank you.
This is only for the solar.
Great. Thank you.
All right. Anything else?
John, I have 11 TIAA accounts, and they
Right.
tell me
Yeah.
I can't combine them because each of them is unique.
All right, but they're all within TIAA, right?
Right.
Yeah, so what's going to happen is my cousin has TIA accounts, and actually I went with him last year to sit down and talk with the advisor. What they're going to do is that's like having one account because you're all in one broker, one provider. So what they're going to do is they're going to say all these accounts, this is what your RMD is going to be. So it's not like you have one account with Schwab and one account with Merrill Lynch and one account with TD Ameritrade. You have everything with TIA, so you really do have a consolidated account. So you don't have to worry yourself about that. As long as you're happy with their service and everything, you could still take all that money and roll it over into an IRA if you want, and then you would be doing it yourself. But if you're happy with them and you're happy with your advisor and your choices, just stay the way you are.
Okay, I've already done my 2020 taxes.
Yeah.
For 2021, I can now create an IRA or add to an IRA.
If you're still working, yes, you have to have earned income.
Not working.
No, you have to I'm sorry, maybe I didn't make that clear. In order to contribute to an IRA, you have to have earned income.
Thank you.
Okay.
Any other questions? Anybody have anything specific to what we've discussed?
All right, so just slide down to for the New Jersey, state of New Jersey. It's on the bottom of this page.
Yep.
Okay. All right, state of New Jersey has quite a few things that are pretty cool now. 65 and over, this has been around a while, you get an extra exemption of $1,000 per person. A veteran gets a $6,000 extra deduction. And what you do is there's a form called the Veteran Income Tax Exemption Submission Form. And what you do is you file that with a copy of your discharge papers. Once you do it the first time, subsequent years, all you have to do is claim the deduction. So that's a pretty big benefit they give you. All right, medical expense deduction. Now, normally on federal, it's very rare you're gonna be able to deduct it because it's a 7.5% over your AGI, and unless you have a very serious medical issue, you're usually not going to deduct it. But on the state of New Jersey, it's only 2%. So a lot of people can deduct part of their medical expense. So that would cover obviously your insurance premiums, Medicare, if you have a supplement, if you have regular insurance at work, any out-of-pocket medical costs. Don't forget your dentist. A lot of people, when they do their tax returns, for some reason they forget their dentist because a lot of people don't have medical insurance with dentists and just sort of flies out of their mind. Eyeglasses, eye exams, if you need any medical equipment, say you're recovering from a surgery, anything prescribed by a doctor counts as medical expense. Add it up, and on the form it'll say reduce it by 2% of your AGI, and it could become a nice deduction that you don't want to overlook. All right, property tax deduction. A couple of years ago they increased it from $10,000 is now $15,000. And again, another thing a lot of people overlook: if you pay rent, you're entitled to an 18% deduction of your total rent for the year. All right, and again, with rents in New Jersey, it could be a substantial deduction for you. All right, and then just scroll down again, Michelle, to the next. All right, and now this is something that I think this is the last year now, or I mean, it's at the last highest amount, but I think it's only 3 years old, is the retirement income exclusion. So this retirement income includes pensions, annuities, and IRAs. All right, it's up to $100,000 of retirement income if you're married, filing joint. It's $75,000 if you're single. You must be you must be 62 or older. And the problem is, or the kicker is, if your total income goes over $100,000, even by $1, you lose the whole exemption. So if you're in that area, you have to be careful with that. So this is another substantial benefit for retirement income, because it really cuts your taxes down to a lot of people go down to zero with this. So be aware of it, and just keep an eye on it. All right, so that's basically it as far as things for this year, or anything new. So again, Michelle said if you have any questions.
Okay, I have some in the chat. I'm gonna, I think, did Camille ask yours, the 11 TIAA accounts?
Yes. Yeah, she did it verbally.
Another question is, pension income still working off my own first 3 years of contributions from my own salary counted as earned income for co-contributing to a Roth or whatever?
Well, I don't understand. Who's the person that?
Patty, you want to talk?
Yeah, explain that. That doesn't make sense to me, what you're saying.
Patty, unmute yourself and ask the question if you would. Are you still there, Patty? Patty, can you unmute yourself? So we can get a little clarification on that question. All right, we'll come back to Patty.
All right.
Anybody else have a question? You can unmute yourself and ask, or you can put it in the chat.
Could I ask a question on my form that I got from my capital gains form? It's whatever it's called, for my tax information. They have something called 199A dividends. What are they, and what do I do with them?
It's a different dividend. It goes on. Hold on, let me see if I have the.
Yeah, I try to do my own taxes. I have no idea what that means. So.
Yeah, it's just another category of dividends that you have to report. Do you use a computer program or do you do it by hand?
I try to do it by hand,
All right.
but I could use,
I do mine with a computer program. So I wrote on. Let me see if I can see it. Yeah, it doesn't show up separately on the dividends chart.
are they taxed the same amount, or are they taxed differently, or they
I
exempt?
think they're taxed at 100% because they're not qualified dividends.
So they're taxed 100%, you say?
Yeah.
Okay,
Yeah, because the only dividends that won't be taxed at 100% are the qualified dividends.
the qualified, okay.
Yeah.
John, this is
Yeah.
Camille. I have another question. I had two quite large savings bonds that I redeemed.
Right.
And I have a couple more. Is there any way of avoiding the tax hit on that?
Well, I mean, first of all, the savings bonds are only taxed federally. They're not taxed for state.
Right.
And you're only paying tax on the interest, not on the whole amount.
Right.
The only way you can avoid it or whatever is if you use the bond to pay for someone's college education, the interest is not taxable.
Okay, thank you.
Other than that, that's pretty much it. But at least you're saving a little on the state.
Oh, okay. Patty's driving. So, but you know what, Patty, we can have a conversation with John, offline. So,
Yeah, right. Yeah, that's fine.
does anybody else have a question? So, and John, the tips that you gave, people, just in terms of, you gave people some, you said you had some tips. You gave them those already,
Well,
right?
yeah, that was the one basically about the 401ks, about
Okay.
consolidating your accounts to make life easier and, to
Yep.
give you more choices.
Okay.
It seems to work for a lot. I've been recommending that and
Yep.
people are happy with it.
Yep. Somebody else is asking, is a stimulus check part of one's income to report? Could you just explain?
No, the stimulus check is not income, doesn't show up as income on your return. It only would show up on your return if you're asking for the money back you didn't get. And it shouldn't affect any, people that are on welfare or food stamps, anything like that. It's not income.
Okay.
John,
Yes.
I came in a little late. I'm sorry. I just wondered, did you go over the fact that if you have a commitment to a church, let's say, which would be a substantial amount of money, that if you give it directly from your IRA to the church, it reduces your IRA piece that you have to pay taxes on this
No,
year?
I didn't, and that's a good point. If you're taking out your RMDs from one of your accounts and you want to donate, if you're going to donate money to a church or a tax-free organization anyway, if you make a direct donation from your RMD to the organization, you don't pick up the income and you get a deduction for the amount that you deducted. So that's a good way. And also that also counts if you're just selling stock out of a regular account. If you have a stock that you have a substantial gain and you want to donate money anyway, if you directly donate that stock to the organization, again, you don't pick up the income and you get a donation for the higher, the value of the stock, not what you paid for it, 20 years ago or 10 years ago. So that's one way of deferring these things.
Right. And also for those, I do my own taxes as well from with TurboTax. I don't
Yeah,
know how
right.
you do it manually anymore.
I know, I don't either.
That's courageous, I would say. But I tell you what, I think if you do it manually, you probably miss some deductions, and you
Yes.
spend $55 for TurboTax. But the other thing is that when you do make and of course this year we have to make our IRA minimum deduction again. Which we
Right,
didn't have to last year. And of course,
right.
if somebody took a piece out last year before it was announced in March, well, that's just tough noogie and you have
Well,
to pay.
you were able to pay, you were able to put it back in last year.
Within 60 days when they announced
Oh,
that.
Yeah,
ruling.
I'm saying, but they did have it where you could put it back.
Yeah, you can't put it back in now. It was within.
No. It was only
And
like
it
you said,
wasn't
one
it
window.
wasn't very well communicated to people either.
Yeah, you're right. That's why I didn't even, that's why I
I
didn't
found
bring it
out
up.
after the fact. So I took some out in February
Right.
And by the time I realized you could have put it back, it was too late to do so. So that's
Yeah.
the way it goes. But
Yeah, I
when
know,
you get
yeah.
your 1099 form, your IRA 1099 form.
Yeah,
from
the R,
your
right, yeah.
institution, if you did give a direct donation from it to a nonprofit organization,
Right.
and it can't be $100, nobody's going to do that for $100.
Yeah.
But a significant contribution. When you pass that on to another organization, your 1099 form is going to be the gross amount that was withdrawn,
Right.
not the net of that particular contribution that went over, let's say,
Right.
to the church.
And then how do they show that? What do they show that on the distribution code?
No, then what you do, what I do, which always
Yeah.
works, I just reduce that 1099-R form by the amount I contribute to my church,
Yeah.
and I put that number on my TurboTax.
And you've never had a problem where they've questioned it?
Nope, never.
Wow, because I'm surprised because the distribution code would normally is 7, which means a normal distribution. And when they do the computer match, if that figure doesn't match, I'm surprised they don't question that.
No, they never
All right,
questioned
because
it.
I haven't run across that yet with any of my clients, and I was curious as how they show that on the 1099-R. I thought it would be on the distribution code because, like, if you have a Roth IRA, the distribution code is what the heck is, I can't remember, but like a rollover is a G, and if it's from if you were inherited an IRA from someone else, it's a 4. That's a death. But I've never seen one where it's a direct. They call it QCD, qualified contribution deduction. But I've never seen the code or how they, account for it on the 1099.
Well, what I do also is I don't go through the automatic TurboTax, blah, blah,
Right.
blah.
You just go right to
I
the line.
fill in my own pieces.
Yeah, that's what I do too, because I've done it so many times now.
Yeah, right. So I just reduce the amount I have to take out by the amount
All
I
right.
gave to
Well, I'm
the church.
saying, I'm surprised because I said everything's done by computer now. And the other thing is, like, I was going to mention it. I don't know if it affects anyone or you could pass the word around. The bill that they're signing on Friday, they're going to exclude the first $10,200 of unemployment income for tax. And, because it was in the Senate bill, it wasn't in the House bill, so they had to reconcile it, and it did go through. But they haven't announced how they're going to account for that, because you do get a form for unemployment. So what I was going to do, I was just going to report the full amount and then show it as because I have a couple of clients that I didn't print the returns of because I heard they were going to consider doing it. I'm just going to show it as a other adjustment to income and put out unemployment reduction.
They're doing that retroactive back to 2020?
Yeah, this will be for 2020, right? That's the problem. People have already filed their returns.
Yes, they have to file revised returns
They
now.
have to file an amended return, right? Another hint or another help. If you ever do have to file an amended return, wait until you get your initial refund back on your original return. That means they processed it and they're done with it. Because if you file an amended return while they're still processing your original one, things could get all messed up.
Oh, it could take you 2 years to get that.
Right, that's what I mean. So make sure if you do have to file when you get something late or you forgot something or whatever, or something like this where they change their mind after the fact, just make sure your first return is done and then file your amended return. If you have to wait a couple months, believe me, it's worth not going through the aggravation.
Now, let me ask you another question.
Yeah.
One of the things, we did our filings for July 15th last year.
Oh, yeah, your tax return, right? Yeah.
Yeah. And of course, once they gave us the grace period, 90 days, of course, what do we all do? Human nature says,
I know.
pile it back
Everyone
up,
waited.
take it off the dining room table and put it somewhere else for a while.
Right.
And then hurry up and get to it in the beginning of July and do it and file it, right? That's human nature.
Yeah.
So now when we did all that, and then we had our monies to pay, it was very confusing, and certainly the government didn't give us any guidance about when we had to pay quarterly payments
On the same day, right? Yeah.
And then I wrote an email to my church treasurer.
Yeah.
It was a CPA, and I said, Ted, one of the gals on the phone knows who Ted is on the screen. I said, Ted, when do you have to pay all these things? He said, he said, you got to pay the one in September. I said, oh, I didn't know that. You know,
Yeah.
so
Yeah.
that was a little
That happened.
confusing.
Yeah, I know that happens normally. Like your tax returns due April 15th, and your first quarterly is due April 15th also. So they just pushed, like you said, they pushed everything back 3 months, but you still had to make your second quarterly payment on the same date.
Yeah, so the likelihood of my having to pay a penalty probably because the one quarterly payment was late is probably going to be there because the stupid government didn't tell us.
Well, it depends, depends on how much you owe and what you paid the prior year. You may not,
I hope, I know. But just to mention that again for folks, if you have an IRA in the year 2021, which I'm sure you have, and you have to now make your minimum deduction, which the only reason why we do this is the government wants money. They want
I mean, don't forget you got the deduction, 20 years ago when you were contributing it.
I know,
so now you got to pay the piper now.
Yeah, they make us pay the piper.
Well, that's the way it works.
If you have a major, a college, a church, a synagogue, whatever,
right,
that you're going to pay money to this year, 2021. Okay, nonprofit, a large sum. It's got to be a large sum. Because your financial advisors are not going to fiddle around with $200. Okay, I don't think so. I never asked them to. But when you tell your financial company, I want to make this direct contribution to this concern, and they ask you, okay, get us this information, blah, blah, blah. You give the information.
Right.
Then they will have that physical check issued out of your account and send it to that institution based on the timing you want. Okay. And you just want to make sure you tell the institution it's coming because it comes from your financial company.
Right, not from you.
Doesn't have your name on the outside envelope and all that stuff. So you want to alert them. Look for my check.
Right.
Which I tell our church financial secretary. Okay, every October I say, Angie, look for my check. She always sends you the thing back. Got it when it got it. It's okay. But remember again, if you do that in 2021, when you receive your end of the year 1099, the total amount of withdrawal from your IRA, take that total number and minus out the amount that you had sent direct and put that net amount on your tax return. Otherwise, you're paying interest on that amount that you don't have to.
Yeah, you're paying tax, right? You're paying tax on it, right? Yeah, like I said, I'm surprised that works because, like I said, the match doesn't match, and I'm surprised they haven't contacted you yet on that.
One thing, pay honest taxes. It's another thing to screw up on your own.
There's another question from Marie Claire. Is there an online tax program that you like?
Online, I've never used one, but I understand. Actually, they say the IRS has a good one, and also TurboTax, and there's another firm, Tax Act, and H&R Block all have free versions. There's an income limit on it, and I think it's up in the $40,000-$50,000 range. But I haven't heard one over the other. I really have never used one.
Okay. You mentioned at the beginning of this session. Yeah. They're really, really behind. I remember last year, I know that they were behind because of the pandemic. A lot of were not reporting to work. And I heard reports of like truckloads of.
Oh yeah, there were literally tractor trailers filled with paperwork. Don't forget, besides tax returns, the woman just mentioned quarterly payments. People get notices that they owe money. They got to send those back. People write letters for questions. So there was literally 10 million pieces of mail, unopened mail, sitting in tractor trailers.
Wow.
And from what I understand, the last I just read recently, they said there's still 6 million tax returns that haven't been processed from 2019 yet. And people are filing their tax returns because a lot of them, I think, didn't get their stimulus money. So they're filing their tax return to get their stimulus money back. So they were getting deluged with those now. So they're already behind. And now we have to put out another stimulus check in the next couple of weeks.
Right. And that That's, you would receive that stimulus check via direct deposit if that's how you were doing
Yeah,
it.
yeah, we got direct deposit. Well, so I've heard stories where some person got their first check on direct deposit and then they got their second check on a check. And they're also sending out those prepaid cards too. People were getting cards in the mail. There was no letter, no notice. They didn't know what the hell it was. And then had no notice on the card what it was for.
So they cut them up and they threw them out.
Yep, that's what I read.
And now and you know what it's been taking them to get the money back?
I know, because, but again, why didn't they put a notice in there? This is your rebate, so whatever, but, so just be aware, but you may not get a direct deposit,
Just one other tip, Michelle. Because everything is so screwed up between last year and this year and the mail and everything else, the IRS and the pandemic, if you're getting a refund, give them your direct deposit information. The IRS is not, hey, they got scammed from, I don't know, Russia, China, everybody could be scammed. I mean, not scammed, but your information invaded. But you're going to get a direct deposit much quicker than you're going to get an actual check.
Yeah, I mentioned that before. That make sure you have your direct deposit, because there was even a method back when the stimulus first started. A lot of people don't file tax returns because they don't have to. There was a way you could go online and register your direct deposit information with the IRS, so you could get it faster. But yeah, if you file a tax return, federal or state, make sure you put down direct deposit, because for now and future years, it'll definitely get your money. But I remember I would get a paper return. You would get your refund in 3 weeks with a direct deposit, which is not bad.
Someone is asking, is it always better to file federal taxes electronically than the paper?
Well, absolutely, because you're gonna. I've seen on we have Facebook pages for IRS people. I've heard people got their refunds in 3-4 days doing it electronically.
Mm-hmm.
Wow.
Now, normally when you buy tax software, you usually get one filing for free included, so it really doesn't cost you any extra money. Whatever you pay for the program, it usually will give you one free filing. So if you're able to do it that way, definitely do it that way.
And print it out.
Yeah. Well, if you do it on your computer, you always have a copy in your computer. You don't have to worry about printing it out. If you need it for a mortgage or college or whatever, you always have a copy in the program.
I'm the worst case scenario of this. I mean, I like to have a printed out copy in case my computer dies or I forget where it is. To have, even though you're electronically a printed something. Sometimes you need it for.
No, you're right. It's like a backup. It is. It's a backup that you have. Yeah, you're right.
A file. I prefer a paper file with a piece of paper in it that said these were my 2019 taxes, and I could pull it out if I need it. Any thoughts on auditing? You mentioned that the IRS is really backed up. What should people be aware of in this climate with things being as they are, with audits? What triggers an audit?
Well, look, IRS is very undermanned. But when I worked there, I'm out 14 years now, and we probably had over 110,000 employees. Last I saw, they're down to $70,000 employees. So they're very undermanned. 90% of the audits are going to be computer matched, like I was talking about before with the 1099s. There's individual audits. I doubt there's very many going on. So unless you have a real blatant, crazy thing on your tax return, your chances of getting audited are pretty slim these days.
Right.
The big thing people are asking about is because everyone was working from home this year because of the pandemic. Can you take office in the home? The answer is no, you cannot. Even though you were working from home, there's nowhere to put it anymore. Employee business expenses were eliminated in the 2017 tax law, so there's nowhere to claim it anymore. Unless you're an independent contractor who gets paid through a 1099, then you can claim business expenses there. But if you're a W-2 earner and you work from home, you're out of luck.
So what if your office is in New York and you're now working in New Jersey because you're working from home all year?
Well, that's the other big discussion going on, is that New York still, these states are now all of a sudden, because the rule was, if you worked in New York and you lived in New Jersey, any day you did not show up in New York, you were able to take that off and allocate your tax. Now, all of a sudden, because no one worked in New York this year, or very little, New York says, oh, well, we still want our money. And I'm sure it's going to be a big case, because I just did someone's return the other day, and out of the whole year, they worked 30 days in New York. So I allocated 30 days in New York, and obviously they didn't pay much New York tax. But see, it's sort of like a two-edged sword, because you don't pay a lot of New York tax, you don't get the credit against the New Jersey tax. So they wind up paying a lot of New Jersey tax instead. But that's going to probably come into a court case down the road. But I would say allocate. If you didn't work in New York, don't pay it, and then see what happens. There's nothing. They're going to fight it, but I don't know how they're going to change the rules, because their law says if you don't work in New York that day, you don't pay tax.
Right.
No.
All right. Any other questions out there for John?
I just have a clarification, John.
Sure.
On the contribution from the RMD.
Yeah.
Now, that's beyond the $300, right?
Yeah. No, the $300 is a separate thing. They just, because of the pandemic and people were donating money to various groups to help people out, they threw in a $300 deduction on the front of the return. That has nothing to do with that. RMD is separate. And if you do decide you want to give some of that money directly to a charitable organization, you don't pick up that income and you get the deduction. But if you don't itemize, you may not get to use it anyway. But it would count towards the $300. Like I said, of my clients, probably 80% don't itemize anymore, because you just can't get to the figures anymore.
Right.
But if you gave a substantial amount, obviously you would.
Yeah, thank you.
Okay.
All right.
I have a question. I haven't done my taxes for 2018.
Okay.
Can you make a recommendation?
As far as what? Doing it?
As far as getting them completed.
Well, I mean, I don't know. Do you use someone who does your return normally?
It's a person that's in Clark, but he uses a computer to do it, and he's not sure he'll be able to do it on the computer.
Well, I don't know. I mean, I have programs going back 3 years on my. I mean, I just add on programs. He should. I don't understand why he doesn't have it, but anyone should be able to do a prior year. It's only 2 years old.
Okay.
Yeah.
So, can I get your information?
I don't know, Michelle. Is that okay?
Yeah. I could. Who is asking? I want to put it in the chat.
Patricia Everett.
All right. I'll send Patricia. I'm not sure how you're showing up on the. There,
Patricia
I see.
E.
I got it. I'm going to send you John's information in the chat. Okay.
Okay. Thank you. Oh, I'm on the road, so I can't look in the chat.
Okay. I'll send it to you. I'll send you an email. Okay. I have your email.
Okay. Thank you.
I'll send it.
Thank you.
And if anybody else is interested, John, I could give you John's.
Yeah, right. I know last time you said that wasn't kosher.
I mean, if people are, I'm
All
not.
right. Okay. No, I just didn't want to get you.
I don't want you to be, your inbox to be filled with people asking.
Yeah, right.
But if people are, genuinely, interested or have a question that you don't want to talk about, I get it.
Yeah, right. If they want, personal, that's fine. Yeah.
What's the limit? How long do you have to file your taxes? 5 years? 5 years?
What? How long do you have to file?
3.
How many years?
3.
3
Or
years.
should you keep them back?
Yeah.
It's usually 3. 3 is because that's the statute of limitations. So unless you're in a major fraud situation, it's 3 years. That's how long right now. Your 2017 was filed in 2018. So that means this April 15th, the statute of limitations expires on your 2017 return, which means they can't audit you, but you also can't amend it. So if you did have an amendment, you'd have to get it in by April 15th.
Okay. And then what about, people always ask about how long you should keep your tax returns.
Well, again, 3 years is normal. You know, there's some, like, you know, maybe pension records or stuff you might want to keep a little longer. But like a lot of banks, like my bank, I can go back 7 years now on my bank statements online and get them. And a lot of that information is available online. So I would say 3 years is pretty good. I mean, you know, the chances are you're not going to have a situation where you're going to go back longer than 3 years, you know.
So you can tell my mother that, John.
Yeah, I know.
Got
'Cause the states are notorious for that. They'll wait until the last minute and send you a letter. But other than that, the federal government, usually if you don't hear from them within a year, you're pretty much okay. Yeah, I know. Well, when I worked, I was paranoid. I kept every tax return going back to 1973. Then the year I retired, I threw everything out. You know, I had every time report, I had everything, every appointment book I had.
The other question was, if you're concerned about security, because there are a lot of nefarious people out there that have filed returns, and people, you know, they'll get your Social Security, and then
right, yeah,
and you go to file, right, and
yeah.
then we already funded, you know, we already gave
Right,
you.
yeah.
So any advice do you have?
Well, from what you can go on the IRS website, irs.gov, and you could actually ask them to you get a PIN number. And then when you file your tax return, you put the PIN number on the return. It's like a PIN number for a ATM card. That return would not be accepted unless that PIN number is on there. And then they know this person has a PIN number. We're not going to accept the return until we see it. So you can do that yourself, prevent it. And then some people, after they've had a problem, they're assigned a PIN number, and you can't file a return without it.
Right.
All right, but you can request one prior to that to protect yourself. And the other thing is, obviously, the earlier to file, the better off you are, because that gives the bad people less time to figure out what's going on.
Got it. Oh, that's true. Yeah, sure.
Yeah.
Okay. Yep. All right. Good.
I got a question.
Go ahead. Go ahead.
Yeah, the question is, what was that thing that you mentioned for the $100,000 ceiling?
Yeah, on the New Jersey pension exclusion, all right, once your total income, which means your pension income and your non-pension income, your dividends, your interest, if you had work, once your total income goes over $100,000, you lose the pension exclusion, and then all of your income becomes taxable.
Oh, okay.
All right. But if you stay under that 100,000, you get the exclusion, which is, like I said, a very, very good thing. You know.
Michelle, did you hear my comment before about that PIN?
I did. No, I didn't.
Okay, John, I just want you to do something very slowly, though.
Yes.
Explain to people why it's so important for everyone to get their PIN number, because that's as good as having your Social Security number. Once you have that, you know that's yours. Nobody else can file with that. So
yeah, like Michelle said, there's a lot of scams going on.
Yeah.
And another thing I want to let you know, the IRS will never call you first. You get these, I've gotten phone calls. Oh, the IRS is going to do this, they're going to do that. They will never call you. You're always going to get contacted by mail. So if anyone calls you and says they're from the IRS, hang up and ignore it. And these the other calls you get are these Social Security call where we're suspending your Social Security account. That's all baloney. No government agency is going to call you first on the phone. You're always going to get some kind of correspondence in the mail with a phone number to call back. And same thing with emails. Get any kind of email that says they're from Social Security or IRS or state of New Jersey, ignore it. And if you have a question, call up the tax department or whoever it is and say, hey, I got a call or I got an email. Are you looking for me or is there a problem? So anyway, back to the PIN, like we just discussed, if you get a PIN, it's like having a PIN on your credit card or a PIN on your ATM card. No one else can use that, file that tax return without putting that PIN down. So if someone did without the PIN, the IRS would recognize it as a false return, and they would either ignore it, and I imagine they would investigate it and see if they could track down who, where it came from. So it's definitely a good security thing that they've started over the last several years.
Right. And also that a lot of times when mail comes, it will say, it might change the wording a little bit, but it might say IRS, but then something underneath it that you can't really read.
Right.
So it's very tricky about mail too. So
Yeah, right. Yeah. Like I said, you can always, there always should be a contact phone number on there, you know, and a name of a person or name of a department.
But it should, like, we're looking for .gov email addresses too.
Yeah, right. But like I said, even with that, don't answer anything. You're never going to get an email or a phone call from a government agency first. It's always going to be a mail contact. That's how they operate, because they have records that they need. And if anyone ever gets a question like that, you can funnel it through Michelle, and I'll help you out with that.
Yeah.
Anytime.
Yeah. And the scams change year to year.
Oh yeah. They're as fast as we figure them out, they come up with new ones. Yeah. It's never ending.
Right. But a lot of people were getting scammed on the stimulus. People were.
Yeah, right. They're having, they have websites. Oh, come with us and we'll help you get your stimulus money, and they want you to pay them. And it's something you don't need to do, I've
heard stories of people saying they called me and they said they were depositing it. Give me your bank account number.
Oh, yeah, right. Yeah, right. That's what I mean. Yeah, never give that over the phone either. IRS will never call you and ask you for bank information or anything like that. Your social security number,
And just one other thing, which is not IRS related.
Yeah.
I'm getting a ton of emails that they're making believe they're Amazon. They're making believe it's my credit card.
Yeah.
And they even have the logo, the Amazon logo out there, like that you recognize right away. And then you read it and you see what it says, and you've got to read it. And if it says like, oh, we're charging your account $499.
Yeah, I've gotten phone calls like that also.
And you know darn well what you just have ordered maybe from Amazon.
Yeah, right. Oh yeah, I've gotten a phone call right after I've done an order. Absolutely.
And there's a big one right now coming from Norton as well for security.
Norton? Oh, all right.
Yeah, it's we're charging your account $239 for the next 3 years for Norton security. All that stuff, guys, is a scam.
Yep.
Delete it immediately. Don't respond to anything. Don't talk to anybody, and don't give your social security number out. Don't even give your social security number to your mother.
All right, everybody. Well, thank you so much, John, for coming.
Okay.
And coming up in the online Edgemont classroom, this is our last, I think we're all done with our mill classes, right? So now we're in the online Edgemont classroom. Everyone is welcome to join us. Just go to the portal, sign up for whatever you like. Just know that each week you need to sign up individually. It's not a series. These aren't series classes. These are one-off classes. And I will send the tax info to people that were on this call. If you want John's information specifically, reach out to me. I have those people that have chatted me that they want John's info. And also coming up at 12:30, give me about 25 minutes to get my camera set up and a little bit of prep done. I am making, we're starting the cooking session. The next 5 weeks are going to be doing cooking from the Blue Zone cookbook, which is something that's really, really important. Very healthy eating from the countries that have the highest longevity in human beings. So we're starting off today we're going to be going to Sardinia, and that's exactly where Benedetta went on Monday. So we'll be continuing with the Sardinian traditions, and we're going to be cooking some really healthy food today. So come see what's cooking in the kitchen. And if you're walking in Edgemont, you just smell what's cooking in the kitchen. You'll be able to smell it. Anyway, thanks everybody. Thanks, John. I really appreciate you coming.
Thank you, John.
And if there's any follow-up, you can always just reach out to me and I can connect you with John. Thanks, John.
Yeah.
Left. Bye.